Hello everyone and welcome to this CFO interview with Erik Danemar, CFO at Ferronordic. We're going to talk a bit about the current situation in Ferronordic and a bit about the outlook going ahead. But I guess we can start off at a very basic level for those who are not that familiar with the company. Can you just give an overview of your operations today and your market position within what you do?
Sure, Adrian. So we were founded in 2010. We were listed on Nasdaq Stockholm in 2017. Our vision is to be the leading service and sales company in our markets. And our markets is Germany, 20% of the German markets, where we are the authorized dealer for Volvo trucks and Renault trucks. We're also a dealer for Sandvik crushers and screen in most of Germany. Biggest players in the trucks market there, of course, the local incumbents, Mercedes and MAN. And then you have us and, of course, DAF and Scania as well. Our other market is Kazakhstan, where we're dealer authorized in the whole of Kazakhstan for Volvo construction equipment, so VCE. And again, Sandvik, crushers and screens, and also Mecalac, which is a French-UK producer of backhoe loaders, among other things, but also compact equipment. Competitors there, Caterpillar, Komatsu. Chinese shouldn't maybe be competing, but they are. We have different value propositions, but in the maturity of that market, they are also competition, I would say. We do sales of new and used trucks and equipment. Our task is to make sure that our customer has the best equipment and trucks available for them to achieve the highest productivity and be leaders in their respective markets in transportation or construction. And of course, service and parts, which we refer to as aftermarket. And there the task for us is to make sure that those good trucks and equipment that we sell are always have uptime and highest productivity for our customers. We always say in our vision, service and sales, not sales and service, because we believe service is the key to have strong sales. You need to be present everywhere where the customers are. You need to have the parts availability always, so you can fix the problem that is there, and high quality service. And maybe lastly, worth mentioning, we're all constantly working to integrate closer with both customers and partners. And our rental business, not at least in electric that we're working on, is a step in that direction. And contracting services, which we have offered previously and are looking for new opportunities to offer as well now.
Okay. And in this type of dealership or reseller business, where you are sort of a middleman in the value chain, what do you do that sort of stands out in comparison to the competition? You were...
Sorry.
No problem. You mentioned the service offering a bit. Is that sort of the main reason that you stand out compared to competitors, or would you argue that there are other competitive advantages here?
Well, I think definitely. I mean, we put that service part first to make sure that our customers, again, that we're where they need and that we have the service levels and all the kit they need always, 24/7. They can reach us and make sure that their equipment works. But then also close cooperation with our partners, which we believe provide some of the best products in the market. And indeed, Volvo Renault in the electric part leading really the development there as we see it. So a combination of those factors and building a very result-oriented and service-minded, customer-centric, I think is a key word, organization.
Okay. And what's the top-down situation like at the moment? If we start off in Germany, I mean, on the one hand, everyone, I think, has noticed that there is a weaker economic climate.
Yes.
On the other hand, it seems like the automotive order books are still full and there's some demand to realize. What's your best guess of how the market is going to look like in the near future here?
Yeah, we're always cautious on guidance, but no, I think, I mean, if we're looking sort of currently, medium term, long term, currently the market has been firm. I mean, if we look at what has been presented so far this year by our peers, by our partners, and by us also in the second quarter, what we've seen is a normalization of the supply, and that has satisfied pent-up demand. When we look further ahead, medium term into next year, we see more caution. And that is driven by macro. I really think we're having an economy that is growing more slowly. In Germany, we have still high inflation, higher interest rates. So customers are more cautious to place orders further ahead. But I think that's also a reflection of the normalization of the supply situation. 2 years ago, they could place an order and they still wouldn't get their truck before a year. So they would really to stay ahead of the curve. Yeah. Whereas now, if they order, they will get the truck in maybe 3 months or 2 months. So they don't have to place orders. And so they can be more cautious and wait and see. And I think that's part of what we're seeing in the market. And then long term, we are very sort of comfortable about our markets in the European context, in the heart of the European transport system, east, west, north, south, cross sectors and industries in the European economy. So long-term potential we still believe is very strong.
Yeah. And on the aftermarket side, would you say that that's entirely resilient against economic up and down turns, or how is the situation there?
I wouldn't say that. I mean, you would look at utilization and then the sort of, how do we say, average truck maturity or duration of it. So on the one hand, when the market comes down a bit, typically customers, transport companies, use their trucks a bit longer, and therefore they have to do a bit more service and repair on them. So in some ways, when the market comes down, you can see an uptick, a compensating uptick in aftermarket. But on the other hand, utilization can go down if the economy is coming down, less transports, and that will then lead to lower need for repair because you're utilizing the trucks less. So to some extent, yes, it compensates, but not in full.
Okay. And also, if we touch briefly also on the market in Kazakhstan as well, it's a smaller part of your business, but the construction equipment side there, what are the main drivers on that front, and how's the outlook on that in that sense?
Well, the economy is very different, moving in a very different direction. So I think consensus forecast for this year between 4% and 5% growth. Inflation very high there as well, but much lower than last year. So we're at 14%. It was like 21 or 22 even last year. So coming down, rate levels high, interest rates at 17%, central bank. Currency firmer. So there's a lot of things in the economy that is going in the right direction, and strong demand for equipment. Infrastructure projects relatively strong, bit different between commodity prices, but it is a commodity economy, so that is providing some support for the market there as well. I think its role as a hub in the region is becoming more important, and that's also supporting a lot of Chinese infrastructure investment in the region and in Kazakhstan specifically, which is supporting demand as well there. I think there are maybe two factors, medium term, two long term. One is liquidity. I mentioned interest rates. So that is an issue for our customers. They struggle to find reasonable funding levels. That is something that we would hope and believe will normalize over time as the financial markets mature there as well. And then actually the maturity of the equipment market as well. We've seen that before, where customers are initially looking very much at the initial price. I mentioned Chinese being competitors. They shouldn't be in a way. Our customers should look at what we refer to as TCO, total cost of ownership, over the life of a machine. When you look at all the costs, repair, diesel, etc., ecological footprint. And it takes some time for the market to get there. And similarly, customers often want the machines in 2 weeks, which means that we need to carry inventory, which we shouldn't have to. They should plan ahead, and we're working to help them do that. The big mining companies do that, but there's a large part of the markets that is lagging in that respect. So I think both these factors will actually favor our position in the market.
Okay. I understand. And I guess if we zoom in a bit on you as a company and leave the market behind for a bit, you're in a very special situation at the moment. You have a very large net cash position after selling the Russian subsidiary. Can you just talk a bit about what are the plans for how that capital is going to be allocated going forward?
Sure. I mean, we stated to the market that our first and foremost objective there is to open up new markets or markets, depending on what the perfect fit for us is. Yeah. So we're working very actively on that, on seeking the next growth opportunity for Ferronordic. Currently, our cost structure is too big, or at least bigger than we need for the two markets that we operate. Again, we are looking for expansion in a new market, and the structure we have now can handle that. In addition to that, we of course are continuing to develop both Germany and Kazakhstan, and then other growth areas is, I would mention, as a separate, because it's a bit different, is the electric part, where we're also looking to do rental, but potentially also providing what we call sustainable transport solutions, which is a little bit related to the contracting services we did, where customers hire us and they pay us per kilometer or per ton or similar, depending on how you define that market. And then again, in going back to contracting service potential in Kazakhstan as well. And this is a market where this should exist. And again, with more maturity in the market, we think it will spread the way it has done in other markets. So that's again where we own machines, hire operators, and run the full service, so customers pay us per ton and kilometers instead of buying our machines, basically.
And would you define those two as the main organic growth opportunities in the existing markets, the contracting services and electric vehicles?
Yeah, I mean, I would maybe put those like quasi organic. Okay. I mean, if the new market is clearly acquisitive, then I would put these two as something in between, because it's relatively incremental additions to our business. Whereas the organic would be really, we see market share potential in Germany, definitely. We believe very much in our partners' brands and our ability to grow their presence in our markets. And that would then help us also to grow the aftermarket share, where there's definitely more potential to do more as well. I think we have some cost optimization still to do in Germany. And then if you look at Kazakhstan, similar, definitely more market share potentially, definitely also aftermarket sometimes lags. You need to get the population out, and then you pick up in the aftermarket. So definitely more potential there as well. So probably I would put it like that. That's the organic, and then you have electric and contracted service as something in between, and new markets being the acquisitive part.
Okay. And when we talk new markets, are you strictly speaking in a geographical sense a new market, or are we potentially speaking about different or new product verticals as well? Sure.
Well, I think it's always been, if you go back to our strategic targets, on the one hand you have geographic expansion as one of our core strategic objectives, and on the other hand you have new business areas, which would include contracting services, but also taking on new brands and providing new products to our customers. I think in this where we are now, we continue to speak to potential partners that fit well with our current partners. So it's a complementary situation, not otherwise. But primarily probably looking at geographical, a new market in that sense, okay. First and foremost.
Interesting. I guess I'll round off with a more sort of long-term forward-looking question. You touched briefly upon your vision in the beginning. Can you just expand on, if we look 5 years out, if everything goes according to plan, where do you see Ferronordic in 5 years? What type of company are you, and how are you different from today?
That's a interesting question. I mean, I would probably go back to our strategic objectives and what we say we want to achieve there. So we would be in several probably more geographical markets. We would like to expand our product portfolio with again products that is complementary to the offer we currently have, so we can offer holistic solutions to our customers. And very much as a general trend, I think, in the industry, getting closer in the value chain, getting closer to our customers, working very closely with our partners as well. And I think, contracting services is very interesting in that respect, working again close on both sides, really integrating with the customers in their production cycle, becoming an integral part of that and adding value to them. And for them also, this payment model makes makes sense. It's rational for them. And again, we need in that situation to work closely with our partners like Volvo and Renault. So yeah, I see those sort of probably three things as really driving Ferronordic's profile going forward.
Perfect. And with that being said, I'd like to just thank you for your time and for giving us an overview of Ferronordic.
Thank you very much, Adrian. Thank you.